I owe any income tax if I sell my home for more than what I paid for it? I have to ask a question of you to be able to answer it, and the answer is probably no if you have owned the property and resided in it for 2 out of the past 5 years. If so, you can then exempt from any sale $250,000. If you own it as with another party or husband and wife, you can exempt up to $500,000. And the sale does not have to be reported to the Internal Revenue Service. However, I believe on your tax return there is a box that you have to indicate whether you sold your residence. You also have to state that you haven't taken this exemption also in the past, I forget how many years, but you can't have double dip if it's, let's say, a second marriage or a second home or a residence. So usually you do not have to pay it. However, if you haven't owned it and lived in it for 2 out of the past 5 years and you sell your home, then you will have to pay long-term capital gains on it if you've owned it for more than, I believe it's 6 months or a year, but you do have to pay tax. Unfortunately, if you sell it for less than what you paid for it, well, then you don't get to take a loss because it's not an investment property. You only have to pay on the gain. Also, this is a question that comes up many times when someone short sells their property. And so if you sell it for less than what you paid for it, and then your lender gives you a 1099 of whatever the gain is, you can offset the whatever gain the lender gave you a 1099 for against the sales price and your loss. So you won't have any income tax liability, and you also may be able to exempt the transaction under the 2-year living there and owning it for 2 out of the past 5 years. So if you have any questions on it or want to sell your home, well, give me a call at 727-847-2288.